Hello everybody, welcome to the stock market swing trading outlook for the week of January 23rd. Each week I go through the same process. I look at how major indices are performing, market health indicators, recent watch list and my trade performance, and sector performance. That all equates to the first step in the overall swing trading method, which is looking at overall market conditions, then deciding if you want to trade individual stocks. Then you're looking for the patterns within those individual stocks and the triggers. So this video and this article focuses on this first step, and then these watch lists would focus more on the individual stocks and the patterns that are forming. So heading into the week of January 23rd, conditions are good. We'll go over why that is the case. So I'm going to continue to add long positions, and as long as conditions stay favorable and I see setups that I like, that shouldn't be too much of a problem. Lots of stocks on the watch list, had some hitting targets recently, so looking to deploy that capital again. And yeah, so should have lots of opportunities assuming this market stays strong. The nice thing about almost all my triggers is that the market has to be moving up. So during that little decline that we had for a couple days, most stocks aren't triggering. So once we start to move up again, we should start to see a lot of those stocks on the watch list start to trigger. I always look at 4 different US indices. They each tell a little bit of a different story about the stock market. You have the NASDAQ 100, which is mostly tech stocks, the S&P 500, which is mostly large cap US stocks. NYSE Composite covers a wide array, all the stocks listed on the NYSE, vast varying sizes, varying industries, so really diverse and probably my favorite overall view of how the market's doing. And then the Russell 2000 looks at smaller companies, which some consider more speculative. I'll also look at the Canadian index. I also threw a couple extra charts on this week, so we'll look at those. So you can see my overall look here, but we can just go on the chart. And we can see NASDAQ the weakest. It's just coming off its lows and bouncing up. The S&P 500's had a much bigger bounce, and we're moving back toward these prior highs from December. And the NYSE Composite has exceeded that high from December, late November, and we've pushed above it. So that's really good. That's uptrending behavior. Uptrending behavior is higher highs, higher lows. And so right now we're seeing that in the NYSE, which is, as I mentioned, the broadest measure that I look at for overall health, because it just includes so many different types of stocks. Russell 2000 also, which is what most people consider a little bit more speculative companies. When it's doing well, that shows that there's a lot of money out there to buy some of these more speculative companies. And, in a way, they're shying away from some of the bigger names at the moment and willing to buy some of these more speculative companies. And I think that's actually a good thing, because it shows there's lots of buyers out there who want to get involved and are looking for returns. And so I like seeing this here. S&P, or the TSX Composite, also doing quite well. It has moved back to its prior highs and is moving up at the moment. This one's an interesting one. These are 2 ETFs, VUG and VTV. So one is a growth ETF and the other is a value. So the G is growth and the V is value. As the last letter of each of these, VUG is growth, VTV is value. So when we compare these two and we create a ratio out of them, we can see the ratio is always kind of based on the first one, you could think of it as. So VUG, or growth, was just getting decimated the last few months. And if you look at some of those bigger names out there, especially the tech stocks, we're getting really hammered. And we're starting to see recently more of these growth names have a resurgence. So we still have a long way to go to retrace some of this damage that was done in the growth stocks, but at least they're starting to build back up at the moment. Not quite in an uptrend yet. I'd like to see it get above these prior highs, and that would show some good turnaround on those growth stocks. Gold still ripping up for the moment, been really strong since about November. and oil, just threw it on here, another commodity, still a little bit weaker. So gold names will probably see quite a few of those, and basic materials has been one of the main sectors to watch, and gold's included in that. So basically you can read what I just wrote there, but that's the overall outlook. So a couple are weaker. The NASDAQ not quite as strong as some of the others, but I do like what's going on in the NYSE, and most of these other ones doing quite strong, and at least for right now, moving to the upside. So I am a buyer. Remember, my positions are usually only a week to several weeks, maybe 2 months at the longest. So I'm not looking at where the price is going months down the road. I'm just looking, are we buying or are we moving up? Great. And then I also look at these health indicators. So you can see the right up below, but we can go through them. So again, price action wise, we did dip below these prior swing lows, which wasn't great, but we have started building to the upside. Ideally, this, of course, continues higher. This is the number of stocks above their 50-day moving average. Much easier to make money on the long side when most stocks are moving up. And right now we have that. We have 67% of all U.S. stocks above their 50-day moving average, and 61% of the S&P 500. So again, we're seeing a little bit of that. The average stock is doing better than these really big names, and that has a lot to do with some of the more tech stock names, which haven't been performing as well as we saw with the NASDAQ 100 as well. Volume, not super important right now. This is the percentage movement per day. And during uptrends, it is usually very quiet, more something like what we see over here at the far left, where you're moving up 1% or moving up 0.2%, maybe dropping 0.1%, moving up 2%, 0.2%, sorry. And during downtrends, we see these much bigger moves where you're dropping 1 or 2% a day. You're moving up 2 or 3% a day. So we are still in that volatile environment. This is definitely not a clear-cut uptrend yet based on this kind of information we're seeing. But at least we haven't had any big 2% drops in over 5 weeks. So that is a good thing. You start to see, like, during really bad periods, they get clustered up. So this red line marks the minus 2%. That's 2% drops in a day, and you can see they really get clustered up. And we have these periods where it doesn't happen, and those are uptrending periods. Then when you start to see these big 2% drops again, that's usually almost always a sign, or it tells me to step aside for a little bit and see what happens. So no long trades during those times. Then we got all clustered up again. Lots of 2% down days, 2% down days. And then we had another one here. Told you to stay away. Market was dropping. Now we're starting to move up again, and we haven't had any of those big drops. So that's a positive. This one, really good. This is the NYSE Advanced Decline line, number of advancing stocks versus declining stocks, and it's a cumulative index. This has moved above its December high. The S&P is still below its high. When you have this type of what's called a positive divergence, meaning you have NYSE stocks just really performing well, broad measure, the S&P typically, almost always, it's not 100%, but it's a very high percentage, will follow through to the upside and also create a swing high. So that's one of the main reasons I'm willing to buy. Like, yeah, price action, we're still below these highs. It's not a super clear-cut uptrend. We just had a drop below these prior lows. But this is very bullish, this indicator right here, just because it's moved above prior highs and the S&P is still below its prior highs. This is the percentage of volume which is occurring to the upside or the downside. Nothing too important going on here. I only really care when it hits this very high upper band, 90, or it hits the 10%, and we haven't had either of those. We've got close, but not quite for some time. So that one's not super important at the moment, but the last signal was a bullish one where we had 90% upside day. The last thing we'll look at is how are the setups we're looking at performing? And when I look at the watch list, there's always going to be a few that don't perform well, but overall, how are those stocks that actually set up, or the ones that I was looking at, how are they doing? And overall, the watch lists are doing quite well. The trades I've taken have been doing quite well and hitting targets. So we can't ask for much more than that. You're never going to have everything on your watch list do well. So is it most of them doing pretty well? That's great. So that's another signal that tells me, hey, yeah, keep buying stocks as long as what you're doing is working. Sectors on the move. It's gotten a little bit more where there's not as many clear leaders. Prior, we had several of these, like basic materials, industrials, financials, healthcare, energy in there. They were all doing pretty well across various time frames. Now basic materials is the one that's holding up probably the best. It's still up here, top on the three months, second on the 1 month, and it's holding in there in the upper half on the week. So it's kind of the best one across all these time frames. But we can see over the last month and over the last 3 months, everything's doing a lot better. So if you take out basic materials, some of these other ones have done a little bit better than some of the other ones, but at least they're all doing well. So what does that tell me? Basic materials still probably doing the best. Finance isn't so bad, or financials, but pretty much everything's doing okay. And so I wouldn't be too worried about the sector. We'll probably get one sector that really emerges again, or at least basic materials is at the moment, but we may get one or two others that just start really outperforming and just keep leading the market higher. We don't, in my opinion, don't have that leadership at the moment. So basically, any kind of strong stocks in most of these sectors, the trades I've been taking have been from various sectors and they've been doing good. So sector is not a huge issue for me right now. What I'm doing this week, I'm willing to add positions. If I see setups I like, I'm willing to take trades. And of course, I'm always day trading. You can see how I day trade stocks in the price action stock day trading course, or how I day trade Forex in the Euro USD course. What I like about day trading is that there's no waiting. You have opportunities every single day. And in a year like 2022, which was mostly a down year, not a lot of swing trading opportunities on the long side. Most of you that watch these videos are buying in your retirement accounts or your tax protected accounts or something. So most of you are long only investors. That doesn't mean you definitely can short if you want. But in a down year or a choppy year, we're just not seeing as many opportunities. So that's what I like about day trading, is you have the opportunities all the time. And that's your stock market swing trading outlook for the week of January 3rd, 23rd. Until next time, happy trading.